This video is being made as the second video under the balance sheet section of the demo data guide. It may end up moving into the first video position. I just finished the first video. It was about just under 19 minutes long. And I realized I kind of dove in pretty fast and got into some details. And I'm not sure I really skimmed the top enough. So I'm going to try to just skim the top here and see if I can give a big picture paintbrush on this to see if I can help out with some understanding, and then I'll leave off and let the other video fill in the blanks. So what I'm going to go over here is, what is a balance sheet from 50,000 feet? Who needs one? And do I need one for personal accounting? What would be the advantage for having one? Okay. From 50,000 feet, a balance sheet is not a snapshot in time. A balance sheet is two different reports. So in our balance sheet, the bottom half is report number 1, and that is the snapshot in time. The top half is a review of transactions over a period of time, and it's what I referred to in the second video, or the other video, as a cash register project. I started with $100, I added 20, I added 15, I subtracted 10. At the end of the day, I had $130. So to create a balance sheet, you have to have a start date and an end date. The bottom half, that's a snapshot in time, uses the end date, and this feeds off of bank transactions. The top half uses a known balance sometime prior to the end date, and then it includes all the transactions that I've categorized between that date and the end date, and those transactions should add up to the same ending balance that I can verify in my bank account. So these kind of are, I think of these as gospel, like the known amount, the absolute, the company net worth absolute amount. I think of that as, this is gospel, because I can pull out my bank statements and verify this. Now, if you have inventory, you're going to have to generate your own third-party inventory reports. That part can't be, it isn't perfect gospel, but it is what it is. But generally speaking, these are the correct values. Unless you make a typo, this is the target. Then what you do is you go back to a time prior to this and you look at all the transactions you've categorized. If they were categorized properly, if the proper accounts were assigned to them, then this should add up. And you say, well, gosh, how could they not be assigned to them? Well, if there is no account assigned to a transaction that contributed to this change, this won't reconcile. So if I just forget to categorize a transaction, this will not be in balance. The other thing in our system you can do is you can actually categorize a transaction to itself. So in the checking register, let's say or in the checking journal, I'm trying to make a transfer to the credit card. If I accidentally assign it to itself, we don't have any mechanism to say, hey, that's an illegal assignment. So that would cause an error. The other most common error, there's 3 of them. The other most common error, actually there's 4. The other most common error is when you accidentally allocate a transfer as an expense. So let's say I paid down a credit card, but in fact I counted it as cost of goods sold or office expense. That will screw up a balance sheet. So the fourth one that is a contributor, can be, is if you have a transaction that was supposed to fall in this date range, but you fat-fingered or typoed the date, and it actually was no longer in its proper date range. Now, with our system, with that statements worksheet that you've seen, we would pick up that error here. So this system with this actually eliminates a 2 or 3 of the common errors that can contribute to balance sheet errors. So it really limits it to a missing category, or a self-referencing category, or a should have been a transfer and was an expense, or should have been expense and actually got categorized as a transfer. So these 2 systems work together to keep things straight. If we did not have this statements worksheet, we could still use the balance sheet and do what we need to do for data integrity. So that statements worksheet we have just adds a level of credibility, and it removes some of the errors that would otherwise be caught by a balance sheet system. The value that a balance sheet adds is credibility to somebody's books. Bookkeeping is a self-regulated process. There are no rules. It falls under generally accepted accounting principles. There are ways you're supposed to do it. Okay. The entire taxation system is a voluntary system. You only might have problems if you get audited, and then you only have problems if you get caught. That's a foreign concept to most people. They think it's very mechanical when there's actually a fair amount of variability in the way you can do your books and how you do them. But the net number should be about the same if you follow the proper procedures. This worksheet, this report, only gives, so oftentimes you'll do your own books. I, as a small business person, do my own books. When I go to my CPA for tax time, I hand him my income statement. I could have just made that stuff up out of, I just pulled it out of the swamp. But what the balance sheet does is it tells my CPA, if he wants to cross check it, it's an easy way to say, hey, it looks like your bank statements on this date said this, on the end date they said this, and from your balance sheet it implies that you have categorized something to account for every penny. Now, I could have cheated in my categorization process or messed that up, but it gives it removes the egregious errors that can come up in accounting intentionally or unintentionally. So that's what a balance sheet does. If you are an individual, so businesses are required to have it. Your CPAs typically will not submit taxes for you unless you can provide a balance sheet. That's kind of like your way to say, hey, I've done my work pretty well. You know, I'm kind of up to speed on things. If you can't do it, you give them all your transactions, and they will categorize the transactions. And in theory, they'll create a little balance sheet and make sure that they haven't missed anything. But if you are an individual, do you need a balance sheet? Absolutely not. You know, you've got the reconciliation system in here, and you've got the income statement, and away you go. Here's the crux of it. If on your income statement you're really interested in tracking how much you spent at the barbershop or how much you spent buying alcohol or in the bars and restaurants, and if you forget to categorize a transaction, you went out to the bar on Friday night and blew $600. If you forget to categorize that, and you come in here and you look at your bill and you don't catch it, so you don't realize you spent $600, you're going to know you spent $600 because it'll be on your statements. It just won't show up on your income statement. Does that really matter? For most people, it doesn't. You know, it's so what, I missed it. So, and there are other ways to check our system. You've already seen in the check register where we have these numbers up here that we turn the row count on. You can get an idea of your data integrity here. You can get an idea of your data integrity over here. And I forgot to even show this on the chart of accounts that we have uncategorized transactions actually showing here too. So there's so many ways to cross-check this. For individuals, there's really little to no reason to track a balance sheet. But if you want to practice or if you find it interesting, sure, do it. And with our system, it's fairly simple to do. So if you ever think you might want to be in small business, start doing it with your personal finances and just create your balance sheet. And you might be surprised. It's a good, almost like a good self-check system to see how good your bookkeeping is. You might be surprised that you actually do make 1 or 2 or 3 errors every year that you would never otherwise know that you were making. So in that sense, it's an interesting mirror. Even people who do great bookkeeping make errors. It would also show you how difficult it is to set up a file from the beginning when you don't have zero balances, everything like, setting up from scratch, new bank accounts, new credit cards, new checking accounts, new savings accounts. It's pretty tricky to set up a bookkeeping file. I have full instructions for that, both written, and we'll probably have a video somewhere, but it's tricky. So if you want a good little challenge, instead of doing crossword puzzles, you play with your own finances. So that's the 50,000 foot view on balance sheets, what they are and who needs them. The other video that I did prior to this, which again, depending on which order they're in, maybe after this, gets into all the details of the balance sheet at a much more granular level.